Hi there. As part of our A2 macro assessment of the Chinese economy, let's look at the impact of fast growth in China and improvements in relative living standards. So here's the chart showing the economic cycle for China. And yes, China does have a business cycle, although of course they've avoided recession over the last 35 years. But actually anything less than 4 or 5% growth is effectively recession for the Chinese economy. But obviously the key thing to notice from this chart is the very fast rate of growth of real GDP over time, peaking in fact in 1984 at over 15%, but in the most recent time period growth in China peaked at just over 14% in 2007. Then of course we had the global financial crisis kicking in 2008-2009, but China continued to grow quite quickly, helped by an enormous fiscal stimulus policy from the Chinese authorities. I think the key point to note from this chart is that the rate of growth in China has been decelerating since 2010, from over 10% now down to just over 6% forecast for 2016. So China's trend growth is strong and high, but probably falling. Now what I've done on this second chart is I've superimposed not just the rate of growth of GDP, as we had before, but the level of GDP at constant prices measured in their own domestic currency, the Chinese yuan. And you can see that the Chinese economy has grown extremely quickly, both in terms of rate of growth and the absolute size of the economy each year. To put this in perspective, in 2016, if China grows by, let's say, 6.5%, that is the equivalent of adding a country the size of the Netherlands to the world economy. If they were to grow a little less quickly at 6.3%, well, that would be the equivalent of adding a country the size of Turkey to the world economy. So this is an enormous seismic change in the global economic backdrop. And of course one consequence of this fast growth is that China's share of world GDP has been rising quite quickly, from just over 2% in 1980 to 6% in 1995, and over the last 20 years that figure has continued to grow, almost 18% forecast in 2016. Now, the focus of this little revision video is to think about relative living standards. So clearly China's growth has lifted hundreds of millions of people out of absolute poverty. The number of people in China living on less than $1.90 per day PPP has fallen dramatically. China has achieved a significant increase in GDP per capita. But one way of measuring relative living standards is to compare GDP per head relative to other countries. In this case, we're looking at the United States, and this chart shows for 7 countries their GDP per head relative to, as a percentage of, the United States GDP per person. Again, we're adjusting here for purchasing power parity. And if you follow the red line here, the dark red line, you can see that China's relative living standards have improved. In 1992, they were just 1/20th of the United States level. And in 2019, on current forecasts, they've been nudging towards 30%. But that's quite important to note, that despite these many years of fast growth, China remains relatively poor. They have living standards of less than 1/3 of the United States. Well, they've diverged away from India, as you can see. India is in green. China has overtaken Indonesia in terms of income per capita, and more recently they've overtaken Brazil, although of course Brazil has been flatlining in recent times. So I suppose the next target for China will be to achieve living standards per capita something close to that of Mexico. It's also worth noting that Russia, of course, has flatlined in recent times. Indeed, there's been a decline. So their living standards are roughly about 43-44% of those in the United States. So fast growth can cause an improvement in relative living standards. But for China, although they're now the biggest economy in the world, they remain poor in relative terms of relative GDP per capita.